A couple of days ago, some of my friends asking me, what do you feel about the crude oil? It's time to buy. Now, I gave them two views. I do tell them that the US crude oil, because of the US dollar, will likely rise, but the upside will be limited. And to be told, the last few days, the crude oil price went up. So they asked me again this morning and asked me that what do you feel about the crude oil now? And I said that it's time to take some profit. Now, because the US crude oil is closely watched and is a very good indicator for the US recession, especially for 2025. And with the funds now dumping MG7 stocks, I think it's time to be very careful. So watch this video to find out more in detail. Now, before that, disclaimer apply as usual. Now, first of all, let's just understand what's happening right now in the stock market. Now, we just had 26 cuts this month alone. Incredible. All right, apparently September 2024 was the fourth biggest month for central bank policy rate cuts this century. That means that central banks around the whole world has become in unison to cut the interest rate together. All right, that is the reason why you can see everyone is going ballistic with stock market. But the question is this, if you realize that it ever happened, and every time it happened itself, that was the period of a recession. Can you see that right now? 08 and 2020. So is that a problem coming in? I believe it's coming in. That's why it's a coordinated movement. That, of course, you can say, but Kel, the stock market is going up, everybody's going up, everyone is going happy. I understand. With so much money in the market, definitely there will be the benefit. But at the same time, there will be the downside because inflation will rocket, prices will go crazy, buying power will reduce. So Goldman Sachs came in and says that, right, the S&P target is at 6,000 is too low. In fact, he's so bullish that he's looking much, much higher. But at the same time, the bearish tones seem persisting for the next few weeks, according to him. So it's like covering hits. But we must understand the September job report, right, that came out recently, what impact is done. Now, first of all, it came contrary to expectation. It was expected to be low, but it went much higher. The question is, how come? Now, 254,000 stocks versus 147,000 consensus. This is something that no one expected. And I feel that there's something very wrong here. Now, this upward revision, okay, because compared to the previous month, it was like, 142. So why the job increased so much over a same period of time? There's a question I'll ask. And of course, the unemployment data rate also went down from 4.2 to 4.1. Again, a big question mark. So of course, now with hourly earnings now better than expected of 4%, so that means that the Federal Reserve has no reason to cut interest rate, right? Or do that type of drastic move. And that's the reason why now we notice that the market now, we got the next FOMC meeting in 32 days, or 31 days today. All right, it's looking at not a 50 basis point. In fact, itself, right? Now, there is almost a 0% chance that there will be a 50 basis point. As a matter of fact, 97.4% now are all looking for only a 25 basis point. And that is the reason why the gold price hasn't gone up. So a lot of people have been asking me why the gold price didn't go up, because the market priced in 250 basis point. And this time around, it's similarly coming on the 7th of November, it will be only 125 basis point. So if the market now so buoyant with this upside because of the rate cut, the question is, why ain't the stock market pulling back? Well, you must understand that it take a while because now the US dollar has recovered. Yes, indeed, because US dollar came down because they were expecting the interest rate to be cut by 50 basis point, right? But because of right now what's happening, the US dollar pump up. Exactly. So that's what's happening to the market right now. And because of that, people ask this question now. So that's the reason why gold coming off? Yes, indeed. Gold was trading at 2670 and now it's at 2645, 2650. So with the ongoing interest rate, probably at 25 basis point cut, the gold price, I suspect, will have go down a little bit more before it stages a rebound. So traders, don't be surprised to see gold prices going down. Now, the thing is this, I want to ask you guys, is that if you look and compare the Treasury bonds ETF versus the Fed fund rate, this is where it gets very interesting, and it's something that you need to watch, okay? Let me try to show this to you right now. Change my arrows a little bit. Yep, okay, here we go. Okay, So let's take a look at this is the Fed fund rate, right? That was back in 2007. Okay, as you can see that when the Fed fund rate starts to come down, all right, that means the interest rate come down. The U.S. bonds, okay, the Treasury bonds goes up. Okay, that's something we all know, right? This is something that is a textbook answer, right? The bond price, I mean, the rate cuts come down, the rates comes down, the bond price goes up. Okay, unexpected. So same thing again, it happened back in 2000, whereby the Fed fund rate came down and the bond price went up. Okay, it's pretty clear, pretty simple. So the question now we have is that how come we have a rate cut, right? But yet we have an interesting move. Now, of course, in general, the treasury bonds went up, right? But the thing is, what happened last week is quite interesting, and there's something that I want you to take note, because when such thing happens itself, right, it doesn't go into in uniform what's supposed to happening, then things will get very, very dangerous. Okay, and of course, you look at this right now, you can see that between the asset class, we can see that gold is the best performing asset in 2024, but oil isn't. In fact, oil is very far away from how the gold performed. But if you look at it since 1968, they have been performing in kind of like, the same tandem, right? So this what they call a big divergence tells me that something is wrong with the economy, and seemingly people who knows it are buying a lot of gold to prepare themselves for that. And that's the reason why the 26 rate cut this month or last month, September, is a very big question mark to take note. Okay, got my idea now? Okay. So if you look at it right now, the oil speculative strength, okay, has turned negative for the first time in history. Now, this is the net oil speculative length, all right, managed by the millions and millions of dollars in the market. And now we have entered a negative territory. So the question is why are the funds dumping crude oil, or why ain't they holding crude oil? So that is a very big question. And if you look at it right now, the Saudi has just committed that to increase production. The thing is the price is coming down. Why are they committing more production? What's the reason for that? It's a big question. So all this tells me that probably the boys knows that 2025 could be a recession. But again, Goldman Sachs came in and said that no, there'll be upside for $20, okay, due to the Iran supply shock. Now, I can only say that, right, Goldman has been always the type of guys who will call for this, but he will go for that. So all I can say is, guys, just take a pinch of salt, because the Middle East conflict will only increase the probability of a potential 2025 recession for the US. Okay, so I know by saying all this itself, right, Kel, you're crazy, because no one is expecting a recession. In fact, they say that the soft landing is not even there. Everybody expected the market will just buoyant and go all the way up to the sky. So I understand this, but I'm a guy who watched the market closely with the economics numbers, and of course, I do not say things for fun. I show you statistics. Okay, let's go into detail. Now, everyone take a look at crude oil. The one in crude oil is this, the one in candlesticks. The one that is in line bar is the Federal Reserve fund rate. Okay, now take a look, guys. You notice that the moment when the Federal Reserve cuts the interest rates, you can see that the crude oil price goes down, right? Correct. Interesting. Let's try it again. So when the Federal Reserve cuts rates, the crude oil price came down. Got an idea? Okay, very good. So now you look at it, the Federal Reserve cuts rates. So what do you expect the crude oil to do? This is something that you should take note. But the question is this, why is the crude oil price coming down? Now, the thing is, it boils back to why the Federal Reserve cutting rates. Because they cut rates is because they feel that inflation is no longer an issue, they cut rates. But when they cut rates itself, the US dollar fell, then you'll bring back the inflation, right? Then if that's the case itself, crude oil price should go up. But why, when the Federal Reserve cut rates, you notice that the crude oil price also came down? Now, the only answer to that is because the period of time when it happened, when they cut rates, is where the US economy get into trouble. And then when they're in trouble, people won't buy into crude oil. Got an idea? Yeah. Okay. So if you look at it more in detail, same thing, crude oil price versus now the Dow Jones. Now, a lot of people will tell you that in the cost 101, when the cost of things increases, revenue decreases, hence therefore the stock price should be going down. But if you look carefully, guys, when the crude oil price and the Dow Jones is in comparison, you notice that the crude oil price goes up, the Dow Jones also went up. But incredibly, when the crude oil price came down, the Dow Jones came down. Interesting. The Dow Jones goes up, the crude oil price goes up. Interesting. And the same thing again, when the crude oil price, okay, goes down, the Dow Jones fell a little bit. So of course now, right now, guys, we have an issue because now we can see that the Dow Jones price is going up, but the crude oil price is coming down. What's happening? So is it because it's something new, or is it because there is something that's holding the stock market, holding it while the real factor, the real economy is not doing well? All right, more to go. So you can see right now the trucking employment is declining. Yes, trucking, right? It's all employees, truck transportation in United States is going down. But you can look carefully again, you can see that every time when this happens, oh gosh, guys, you have a recession. So all this tells you that the numbers that come up from the unemployment data or the what do you call the NFP on last week is something you need to put a question mark there. And we know that now it's really October. We're just 1 month away from the US election. You know that something is just not there. Okay, so please be careful on this because the real numbers is showing and reflecting the reality of the market, but things is not showing in the stock market. So you put everything together around the US crude oil, the GDP, the sum rule, you notice that something is telling us that you need to be very, very careful. So let's take a look here, guys. This is the one in green here is the recession, that whereby we have recession in the US. Okay. All right. Then the one in purple of okay, this is where the sum rule is, whereby you can see that the unemployment data. And of course, at the back end is the crude oil price. Okay. So it seems very clear that whenever the sum rule basically goes up, you have the crude oil price going up first initially, and then the crude oil price came down. At the same time, that will be a recession. Okay, let's forward it. And you can see the same thing happening, same thing happening, same thing happening. All right, for the sum rule, the US recession, and then that's the crude oil price. So guys, now with the sum rule going up, you can see very clearly with the crude oil price coming down, basically tells you a lot of the economy. So once we have a kick in of the potential recession in the market, this thing will just repeat. So you cannot deny that something is wrong in the US economy right now, but because of this potential political event coming out on the November period, seemingly the boys are trying to cover and cover and cover. But regardless, whoever become the president, I believe that he or she will definitely take a very big blow in the economy because this still could be very bad. And this, with that itself, right, we look at the NASDAQ chart, I think that this market will get its impact pretty soon. So this is the NASDAQ chart since 2016, and we do we increased the chart trend line, and we can see that beautifully it got its high recently. And then after that, we do the same thing again on this side to get a common grounds, and we get this particular trend line. Okay, so what am I expecting? Now, with this in the market right now, we notice that the mega cap stocks, okay, the MG7, were collectively sold for the 9th straight week. Yes, 12 or last 13. All right, this is not a good sign. If those who have been buying the MG7 stocks, you can see the share, the overall itself has came down quite a fair bit. So I suspect that we might see a NASDAQ pullback somewhere around here, which is about 16,000. Now, again, I do not expect this like immediately. It won't crash, guys. It won't crash. With Meta doing well now, I don't think it'll crash. But I think that, in the time period to come, in about 5 to 6 months to come, I think that there is a possibility that the market will go down to this point. So it will about basically 5 to 6 months time. I don't want to be quoted wrongly, but it's from not now immediately, but in about 5 to 6 months time, I feel that the NASDAQ may pull back to 16,000. And that's how many percent that is 44,000 over 20,000. So that means about 20%. Yes, a 20% pullback on the NASDAQ. Now, again, why is that so? Because I believe that the Federal Reserve will cut more interest rate time to come because they have to do that to prevent a complete catastrophic incident in the US stock market. So they'll have to cut more rates, and that will basically bring a lot more worries. And of course, when there are worries, technology usually get affected pretty badly. All right. So with that itself, I hope you like this video. Thank you very much. Leave a comment in the comment box. Bye-bye. See you then. Bye-bye.